Hello traders, welcome to our new webinar. It's Monday, April 28th. Let me know if everything works fine, please. I'm watching at the chat box here on YouTube. So if someone can say if everything is fine. I can see that Al Khalifa is here, Tim is here, like always. So hope everyone is doing well. And we are good to go. So before we start, if anyone new is here who joined us for the first time, make sure to subscribe to our channel and press a like. Okay, now what's happening this time? We will actually start with the cryptocurrencies, but overall what we see is that we have some very nice risk on sentiment, and as you know, as cryptocurrencies and stock market, Nasdaq in particular, will tend to have some similar directions. But what was very interesting is that despite very strong sell-off that we have seen here at the beginning of April on stocks, actually we haven't seen that much aggressive selling like maybe you would think it will happen on cryptos at that time. But most likely because we have seen plenty of liquidations already starting basically as soon as Trump took office. So that's why maybe there were a lot of liquidations already before that potential reversal that occurred here then in the mid of April. So what is happening right now is that the correlation is still here. We have seen last week stock market doing pretty well into the Friday close, into the end of the week, and you know what I'm looking at going forward or for the next few days. I would anticipate that stocks will stay in this kind of a sentiment, but I'm not really sure if and convinced about some all-time highs straight from here. I just think that more upside could be seen after dips, but I'm still a bit more careful regarding longer term predictions. But at least in the short term, I think that this Nasdaq 100 could keep in uptrend, could keep prices in recovery mode. And if you look at the crypto total market cap, which is overlaid, you can basically, I will hide this Nasdaq right now. You can basically see that we are coming out of this wedge pattern, very aggressive rise. So in my opinion, this can be ongoing impulse, okay, which, as you know, it's very common whenever you have these wedge patterns, because normally after a wedge you will see a very strong reversals. And another confirmation would be if we see a push above 3 trillions, okay, 305 actually. That was the wave A. So imagine that if we see after that extended leg down here for a wave C, if all the way back price recovers into this wave A, wave B territory, this overlap would be just another confirmation that most likely we are back in a bull cycle, okay? But it doesn't necessarily mean that we will see a straight push to a new high after we hit 305 trillion. We obviously could see some resistance first, pullback, and then more upside. So bottom line, cryptocurrencies are doing very well. It's very helpful when you have also stock markets now recovering as well. And I think that, I said earlier, stocks have a bit more upside, and I will show you what I'm thinking of the S&P 500 in a bit. But before we go to that, I also want to look at where it is, at Bitcoin dominance. Now Bitcoin dominance is basically, could be in some, as you know, there are more than 60% Bitcoins all over the cryptocurrency space. But usually when we are at this kind of levels, it means that we are at some kind of extremes. There were a lot of maybe transfers from other coins to Bitcoin, especially when we had these massive pullbacks. But now when the markets are trying to stabilize, we could be again in this reversal point, especially if we consider the sum of the altcoins and have seen a pretty aggressive sell-off and deep retracement. So maybe now there will be an opportunity to look for those altcoins, and it means that maybe dominance here on Bitcoin, for Bitcoin dominance, will actually slow down a bit and will change. So in my opinion, there is a chance that actually we are completing at least this 5-wave rise here from December lows. So I think that there is some very interesting resistance up here, and if this cycle, which by the way I'm trying to look at this as a cycle model, if we are really at the end of this bull cycle, then if this Bitcoin dominance would really start slowing down, it means that maybe there can be real opportunities elsewhere as well, not only in Bitcoin, and maybe some altcoins could do really well. Now looking at the Bitcoin weekly chart, I refreshed these updates. I was sitting here in office yesterday late night and was preparing some of the charts for this week, and basically what I came out with an idea is that this could be a way forward that can still belong to this ongoing extended impulse. Okay, so basically, if you were with us, or if you're our member, you know that before I labeled this as a wave 2 flat formation, but based on the current price action on a smaller time frame, especially with this drop from January highs, I just think that the best appropriate wave count at this stage, if we expect at least one more push to the upside, is to label this as this pullback as a sub wave 2 that belonged to this extended wave 3. So meaning that that was a very nice wave 4 retracement of the higher degree, which also stabilized perfectly at these previous highs here. So I think that there is a chance that we will revisit the all-time highs, and of course, who knows, maybe this wave 4 will get a bit more complex, but the big picture, to me at least now, suggests that we are still in this bull cycle, and if they really will see something positive from these negotiations, if market will really maybe just keep consolidating till start of summer, when actually this pause on tariffs from Trump will expire, maybe that will be the perfect time when we could see again push to new all-time highs on stocks as well on crypto. So there's still plenty of room for market to move back and forth, but at least in the near term, I just think that Bitcoin could see more upside. And what I'm looking at here is that basically I will present you also an alternate view, but the first and the primary view is that that was a corrective drop. We have seen this move out of a triangle. We bottomed at the 74,000. We know that moves out of a triangle will be final in a sequence, and now we are seeing a very strong reversal. So if we think that bulls are back, then this reversal should be made by 5 waves, right? So there is room for more upside in my opinion, because that was wave 1, then after a retest and broken trend line here, we have seen a wave 3, and now some resistance around 95,000. So maybe you could get a wave 4 pullback and then more upside for a wave 5 towards 100,000 level. I think that 100,000 level, that's a very big figure. We know that there was a lot of back and forth moves in that area, so I'm not really convinced that we'll see straight push to new all-time highs. Once we are at that level, I think that there can be some retracement. Now that retracement, once we reach 100,000 level, could be only in 3 waves. From an alternate scenario, okay, it's also very possible and probable as well that you are basically, let me adjust the wave count here, that you are basically in a flat formation. Okay, so you are basically in a higher degree flat formation where you have this as a wave A, B, and you are now in a wave C. Okay, and what's very important, at least for the next few days, is that even wave C in a flat formation should be structured by 5 waves, because the structure is 3-3-5, meaning sharp wave A with the 3 subwaves in wave A. Then you had this complex decline for a wave B, which also can be seen as a correction, and now you have a very strong recovery for a wave C of a flat. So even this scenario, okay, even if it suggests that we could see a very strong reversal back to these levels here, still shows room for more upside. And as I said, that's why I think that 100,000 level could be very, very important up here. Okay, so I hope that this makes sense. Longer term picture, as I said, still we are bullish. Short term we are bullish, but in the midterm, let's say in 2 weeks from now, if we will be trading around 100,000, be careful up there. A lot of moves could happen up here. Okay, Now let's take a look here. Ripple. This one is not catching up the Bitcoin lately, but still we have a very nice clear wave structure. We have WXY pullback here, clearly overlapping decline that lasted within this, that lasted what, for the last 3 or 4 months, and also still contained by these 2 parallel trend lines. So that's a corrective channel, and it suggests that we could see more gains moving forward, especially if we can recover out of this corrective channel. But I would not be surprised if maybe we already bottomed here, because that was these new lows here that were taken out from February were very quickly rejected, and we have seen a reversal to the upside. So maybe that was some kind of a leading diagonal, which can be the beginning of a new trend. And if we see some pullbacks, maybe for some kind of a flat, I think that $2 could be very interesting, very strong support. Okay, very interesting opportunities could occur here while the market still trades above $1.6. So I think that that's quite attractive level and the price action to watch for. Now let's take a look also on Bitcoin Cash. This one is also daily covered in our member section. So by the way, if you're interested in our analysis, make sure to go to the wavetraders.com and check what we have to offer there. We cover a lot of these markets on a daily basis, obviously, also posting the intraday wave counts. So Bitcoin Cash, what's very interesting here is that we have seen a very deep retracement, but we bottomed at the lower trend line of this corrective channel. More importantly, we have seen a very sharp rise here through April. So I think that we have very well, at least short-term risk defined here, or even validation level. As long as we are holding here April lows, I just think that there is a chance that at least we could retest these highs here from March, and then let's see what kind of a structure we get to confirm or invalidate the further bullish look. But at least in the short term, I just think that this makes sense to expect that maybe after a retest back to 310, 320, that would be very nice, beautiful supports, and then watch out for a bounce while the market holds here above 250. I'm watching this one for myself very closely as well. And now finally, when it comes to cryptocurrencies, I want to look at the stock of MicroStrategy. This one, as you know, we have been tracking lately, and it made a very nice deep pullback in 3 ways. We are out of this corrective channel, and looks like that we are now trying to recover. We already are slightly higher in pre-session here as well. So I would not be surprised to see more upside. And as you know, if, as I said earlier, if stocks will do well, MicroStrategy follows the path, cryptocurrencies overall should do well. So this definitely, this whole structure definitely looks very very beautiful actually. But don't get just too excited whenever we are moving back or closer to these previous highs, because keep in mind that now there are still a lot of traders that are a bit of uncertain what will really bring the tariffs. But on the long run, of course, we are expecting that these markets will get used to it, to this tariffs news, and sooner or later we will see a new resumption higher. But there will be a lot of majority of traders who will, or investors who will try to join this trend when we will be trading around the highs, and that's will be a bit too late, and probably the perfect spot to look on the other side and maybe adjust your portfolio. So for now, still looks fine, but just keep in mind that if we expect a wave 5 on Bitcoin, MicroStrategy as well, what can happen? Maybe, who knows, maybe at the start of 2025. And if you are also our member, you know that you know what our Bitcoin time cycle analysis suggests. I think we have this chart in our section, member section. Now let's take a look on the S&P 500. So S&P 500, it's recovering very nicely, a bit slow, but still looks promising. Okay, after this very strong drop, we have seen volume that spiked here at the lows. VIX was very at very extremes here, so a lot of fear was involved, a lot of puts have been bought, but market is now making, like always, the opposite direction exactly from this trend line support. But my concern is that if you look here on this smaller time frame, okay, that basically we have seen the recovery here from the April 7th low in 3 waves. Okay, so we know that this typically means it's a correction, especially when you have maybe another 3-wave drop, which now suggests that we could be on a complex correction. So the point is that I cannot count, at least at this stage, I cannot count this recovery from that low in impulsive fashion. I cannot count this as in a 5-wave movement. It could be some kind of aggressive 1-2 bullish setup, but with this kind of a very deep retracement here in wave 2, not only in price but also in time compared to this subwave, I just think that there are just very small chances for this to be correct. So what I'm looking at is that possibly we are in some kind of a higher degree sideways consolidation, okay, that could be maybe even a triangle. Okay, so I know it's a bit early to call this, but if we consider that that was a 3-wave drop and that this recovery also looks already overlapping and corrective, I definitely think we will have to be aware of potential resistance, maybe around 5,800. But what's good about this current recovery, that even if it's going to be in 7 swings, it's not finished yet. Okay, so I'm looking at the W, X, and expecting another push to the upside for this final leg of a potential wave B rally back into this 5,780 area. That would be very strong, very important resistance, because that's basically dates back to April, to start of April, when Trump announced all of the changes to tariffs. Okay, but now if we consider that we have a 90-day pause on tariffs, maybe that's how long markets will be a little bit confused, because there will be negotiations, there will be some positive, some bad news, so maybe market won't easy find the real direction yet. But once 90-day period expires, maybe I think that it comes around July, maybe during summer we will have a lot of interesting price action, which maybe would allow us to call this cycle as a correction from February highs as finished. Okay, but in the near term, okay, okay, I don't have it here. Let me just a second. I posted one wave count on Twitter, on X, just a second. In the meantime, you can press a like if you didn't yet. Let me just check something here. I posted one chart. Okay, here it is. Okay. Okay, so I posted this chart, is the S&P 500 cash market. I posted this one at the end of last week. So I said that even if there is ongoing corrective recovery as part of a, let's say, triangle, flat combination, whatever, there is still a chance that this market could see a bit of more upside, because this 7 swing movement is not finished. That's, in my opinion, wave ABC, another ABC drop for a wave X. So that was the first part of a correction. Okay, and wave X is just a connector between two corrections. And now you are in the second part of correction, which I think it's incomplete, because this looks like an impulse. So what's very interesting, very beautiful actually right now here, that we are expecting wave B, and wave B could possibly even come back towards this trend line support that was broken, connected from April 9th. And also you have this gap that is still unfilled. That's one gap here at 5,300, and then you have another one 150 points lower. And we know how important are gaps. And what's very beautiful, that if we see this retracement, you have still unfilled gap here above from start of April. So that's why I'm saying that this zone up here could be very, very important, and maybe a very strong resistance. Who knows? But in the short term, be aware of maybe some setbacks, then another push to the upside. But once we are at these levels, be a bit more careful here. I also want to look at not Bitcoin. What I'm talking about, seasonality of the S&P 500. We are in the month at the end of April. We can see that that was some nice push to the upside, like at the moment. Maybe we get then another push higher in the first week or 2 weeks of May, and then a consolidation, and that would actually be matching perfectly here with as we said, with the S&P 500. Maybe some pullback, then towards this back towards April 1st resistance, and then you see a new slowdown and a new retracement. Okay, I hope that this makes sense and that I was clear enough about my views on the S&P 500, and basically this could be important view for the overall stock market. Now let's take a look on some of FX pairs. So dollar, as you know, dollar and the S&P 500 for now are still trading in the same direction. Okay, so we have here in blue it's the S&P 500 futures, and you have in black it's the dollar. So for now this correlation is still here, and if we expect more upside on the S&P 500, don't be surprised if even dollar would see more gains, because that's what we have at the moment. Even if this doesn't make sense, if you maybe just think about how historical price action and correlation should work, I think that this correlation maybe would return back to normal only if we see stock market making a very strong drop, like breaking all the way back towards this 4,800. That would put a lot of new extreme risk off in play, and that's when really investors would be worried about their holdings, and that's when we could see a new, not a new, but normal correlation, when dollar could see a rally because of risk off moves, while the stock would be trading to the ups to the downside. But for now that's not the case. Okay, stocks are up, dollar is up as well, and we have to respect, at least now, for the short-term cycles. And if you look here maybe on the dollar, and if I hide for you the S&P 500, what you have here is a very nice 5 waves up and now some consolidation. So even if you try to ignore the big picture, what this tells you, it's a very clear wave count. Okay, it suggests that we are posing here on the dollar, and I just think that this intraday consolidation is also telling us a lot, and important, suggests that we should see more upside. So after some potential dip, maybe today, tomorrow, especially I like when I see some sharp moves on Monday, because you know what they say about the Tuesday reversals. So what you see on Monday, especially if it's a very strong move, let me try to illustrate you. So if you see, like we have seen here, move to the upside, okay, and then you see some moves during the European session that are very slow, and then suddenly very sharp sell-off during the US hours. Well, you could see this whole price action that be fully retraced by Tuesday. Okay, and this could be very nicely, who knows, play out here as well, especially if we really would see some volatile moves on Monday, because I usually do not trust the Monday flows. Okay, after weekends a lot of new adjustments to positions occurs, and that's why start of a new week, it's the same thing like start of a new session, could be just a temporary reaction rather than the real movement for that day or for that week. Okay, so I would expect that more upside will be seen after this wave B, ideally, which can belong to wave 4. So I think that 101 can certainly still show up, and if you look at the 4-hour time frame, I'm looking this as a extended wave 3 that came to an end down there. So now we are going to retest higher resistance levels, in my opinion. So wave 4, it's still just a temporary bounce, but in my opinion it's incomplete. Okay, now let's take a look real quick on euro. So we are still nothing has moved much since last time. we are basically just sitting in a small range here, but I think that these 2023 2024 highs could be still retested. Even maybe the 38.2% is something that we should watch for, because that's normal retracement for a wave 4, especially when you have this wave 3 is such an extended lag. It's definitely worth to keep an eye on some deeper pullbacks, especially when you have the first leg very sharp. So I don't believe that's all from a wave 4. I just think that wave 4 still has room to move further to the downside. And if we see some Monday rally 114.40, I think that can be some interesting resistance on the downside. The support is at 112.15, 111. That's are the levels that we should focus on, and possibly expecting more upside from there. But as I said before, maybe because the euro has seen a pretty strong and very nice rise compared to other commodity currencies, keep in mind that because of tariffs, ECB is looking to cut rates further. They still have room to do it, and maybe that's something that will keep the euro a little bit back versus the US dollar compared to maybe commodity currencies. And commodity currencies are still, they made a very nice reversal. And there, if there will be any kind of a progress between US and China regarding tariffs, commodity currencies will benefit much more, obviously, compared to something like euro or pound, because those are the currencies that also lost a lot and have seen a very strong drop when this announcement regarding tariffs came out on April. But if you look now here on maybe on New Zealand dollar, as you know, last time I said that we had this not really perfect wedge, but at least we had these new lows that were printed here. So a lot of liquidations occurred, and now reversal, significant one above the trend line support. And if you look closely, maybe on the 4-hour time frame, you can see that that was a very nice push through that resistance. We didn't even look back for a few sessions. We just broke through it, but I still think that this could be now very interesting support on a potential dip. So if we get some kind of a consolidation here, I just think that watch out this level very closely here at 58.50. I think it could be quite attractive. But the reason why I'm looking today is Kiwi. As you know, I'm covering Aussie almost each Monday, and it didn't move much, but I'm looking at it because I'm also tracking Aussie versus New Zealand dollar, right? To see who is performing much better in this current environment. And what I see here is that we have some very nice, beautiful breakdown. Okay, so looks like that was a wave 3. So after this potential pause that could be now happening on this all FX pairs, dollar pairs, when you have dollar index recovering, euro dollar is making a corrective wave 4. I showed you that Kiwi is also possibly in this slightly deeper correction. So when these corrections will complete, I think that New Zealand dollar could be better than Aussie. Okay, of course, both could do well, but if you will try to focus on one of the currency, maybe New Zealand dollar could be better, because what I see here is that we have very nice ongoing bearish impulse. So if this current rally will also be maybe wave 4, watch out for resistance around 108. I just think that New Zealand dollar overall could do really well. Okay, and if you look at the big picture, basically all the way back from 2022 to 2024, that was an overlapping move. So to really say, or at least to expect some kind of a support or bottom on this pair, that would be and should be somewhere below that level. Okay, so as long as we are above that level, for me this decline is still underway. Okay, so that's why I'm saying that maybe if we get some kind of a rally, watch out for potential resistance levels. Okay, now I will look at CAD yen and versus and also New Zealand versus Japanese yen. I've been looking at CAD yen with our members last week. I was planning to go long, we're around 102.40. Unfortunately, after this retracement, we missed it for around 15 pips or so. I thought that that's potential flat scenario, and the idea behind this trade was I saw the stock market recovering pretty nicely on the S&P 500. Back then was recovering very nicely, okay, after this free wave drop here to 5,100 area. So we know that if we have risk on flows, right, the Japanese yen could fall further, or I should say maybe at least it will stay sideways, but other commodity currencies can do really well. So I was looking for potential long setup on CAD yen. Unfortunately, this one has been hasn't been triggered. We haven't seen such a deep retracement, but I still think that there can be some opportunities if really stock market will stay sideways or maybe even more upside, at least short term towards 5,800 or so, as I showed you on the S&P earlier. And with that said, I'm looking at this potential ending diagonal here. Who knows, maybe I'm wrong and maybe that's even a leading diagonal and you will see much more downside. But if we can break this trend line resistance, which will be retested, is actually close to the current market price here. If this trend line will be broken, I just think that there could be room back towards 106 minimum. Okay, so I will keep very close eye on retracement still, especially if we will see some solid intraday price action that will show us corrective subdivisions on these smaller pullbacks here, because as long as we are holding here above 101.20, and if this trend line is broken, I just think that there is really room for further upside. Even if you look maybe at Kiwi here as well, we have seen all the way back retracement to these March 2023 lows, and now rebound quite nicely. But don't get a bit too excited up here, as you know, you probably want some kind of a pullbacks, and if we get and see some retracement here, maybe back towards, check here, towards this level here around 83, I just think that this would be very, very beautiful. It was the previous support as well. Now let's take a look on gold. So week back we said that gold maybe is now pausing, and the silver is trying to make something back and catch gold a bit here. But we are also seeing silver now pausing. So maybe this is something with the dollar that is now recovering and could be. And stocks are also up, so maybe that's not such aggressive running into safety, which makes sense. But still, when looking at gold and silver, there can be opportunities, but I am more fan of the silver at this stage. As you know, in our past webinars last week, we talked about gold silver ratio. If you want to check that webinar, make sure to check our past recordings. So gold silver ratio, in my opinion, could be some very important reversal spot, and if gold silver ratio will move to the downside, silver obviously could do much better. And even if you look here on gold, we have pretty aggressive sell-off on an intraday basis, and now we see some kind of consolidation. If we see a rally back to 3,370, maybe 3,400, watch out this to be a next potential resistance for possible flat here. So I think that this correction is still ongoing and can be deeper. And when you look at silver, even this one maybe is now trying to consolidate, or maybe it will, because notice that these subdivisions here shows 5 waves up. Okay, so we have 5 waves up here into possibly wave 1, and now if we can break this trendline support and maybe see an intraday dip below 32.65, then definitely wave 2 will be in a pullback here. So watch out for retracements. I think that 32 could be very interesting support. By the way, I also missed this buy limits. I put it at 32. If I 32.05, the low was what, 32.08 or something. I mean, crazy, ridiculous. And then obviously, if we see this retracement, I still think there will be some new very interesting opportunities after this slowdown, because clearly from October highs, that was a 3-wave drop. Now you have 5 waves up, so I just think it makes sense to stay with the uptrend. But if you want to join the trend, at least what I usually do and the levels that I try to focus on, especially when you're tracking wave 2, I want to see the 38.2% if you think it's a wave 2. 23.6, it's a little bit, maybe not that I would say it's not enough retracement for a wave 2. Okay, where are you? But definitely not at the level that I would prefer to wait for. Okay, I think the 38.2 or maybe even deeper fips are much more attractive for potential stabilization. Okay, now let's take a look also on crude oil. As you know, there were some rumors that maybe Ukraine and Russia are moving into the right direction. This was also said by Trump, but he's always saying something new, so you cannot trust anything what we hear. But if really that would be the case, if that would be some ceasefire, then of course, I just think that crude oil could see a bit of more weakness. There's a very nice important resistance around $65 that has been retested, now trying to hold back a little bit. So I would not say that wave C has ended here. As long as we are below 65, I just think that we should be maybe aware of another potential drop. But later this year, in the second half of this year, especially if we see another push to the downside, I think that the major reversal will happen. I'm not sure what will trigger this reversal. Maybe because interest rates will drop and there will be a lot of support for the economy. And if at the same time, by then you will have these tariffs, all trade deals done, then of course this could be a very important reversal for crude oil. Now, what about some of single stocks, the final segment of the webinar today? So guys, as you can see, I give you a lot of free, interesting opinions. At least these are my opinions on the market. So please, that's the only thing I can ask for you is to press a like, okay? And subscribe obviously to our channel. Okay, now looking at some of the single stocks, there are a lot of different earnings. You have Visa, Coca-Cola, PayPal, Microsoft, Meta, eBay. I thought last time, as I said, that eBay is, I thought that it was a week earlier, but obviously I was wrong on that one. It's on April 30. Then you have Apple and Amazon. So I will walk you through some of these single stocks. Apple here, I just think it's very deep retracement. I'm not really sure and convinced about all the way moving back to all-time highs. You know that I always look at the markets like a step-by-step approach. Even if my long-term analysis for the next few months is bullish, I will try to focus firstly on a smaller time frame and stick to those levels rather than predicting markets too far into the future. Okay, I want to go step by step, rather focusing on a closer targets rather than looking at some kind of extremes. And this will allow you and allows me to adjust my potential setups much more appropriate. Now, looking at Apple, it could be headed higher because at least we have some kind of a temporary rebound from here, which is not really in three waves yet. So if you try to focus on minimum structures, you should expect three wave rally. And we also have this unfilled gap, which goes back to April 2nd. So obviously a lot of these major big names have these gaps up there. And we know that these gaps can be very important, firstly like a magnet and then maybe like a reversal spot. So at least in the short term, I would expect a bit of more gains here. Now looking at Amazon, one client also asked me to look at it, and because we have a chat room, so if you will be our member, if you are our member, per some requests, we can also cover some of analysis in our chat rooms as well. So I am looking here at the Amazon. Now the big cycle shows that that's a 5-wave movement completed, followed by a very sharp reversal. It makes me just nervous to say that we are headed back to all-time highs with this structure. Maybe it can, but it's not the wave structure where I will be looking for potential opportunities. Okay, I'm not buying I would not be buying this market unless I wait on ABC drop. That would be a different story. But in the short term, of course, there can be some more upside within this relief wave B rally. Maybe we can test this channel resistance here around 205. I think that's very interesting spot for the near term, but don't be surprised if we see some kind of a reversal down from there. Even if you look here, that's already the resistance that goes back from July to 2024 around 200. So that area is definitely very important, but could be retested in the near term. The next is eBay. So eBay, as I said last time, still we are in consolidation. Maybe earnings on Wednesday after the close will provide some very clearer price action and break out of the range. But what would be the most beautiful price action is that after earnings we see a gap down close to $60. We have this unfilled gap, and then for a few days market stays at that level, and then afterwards you see a retracement, a new movement back to fill this gap, and then potentially even resumption higher into wave 5. That would be probably the best appropriate scenario, because if you look at the subdivisions, not all needed A, B, C, D, E legs are in place yet. Looking at Microsoft, this one also has a very nice, beautiful rebound. You can see that that was a very nice retest here of that levels. So as long as we are now above 345, I just think that there is a chance for more upside. At least if you try to maybe analyze, as I said earlier, I always try to look at step by step and focus on minimum objections here. If you take distance of the first leg, measure it for the second, you will get levels around 405. Okay, and if we start trading at these levels, maybe then stay steady up there, I just think that Microsoft obviously could have room for further upside, but don't forget on earnings. So maybe if someone is looking for some new positioning here, maybe you wait on this data first. It really depends of your risk profile, obviously, because earnings we know that will cause a lot of volatility and gaps. Meta. This one also, in my opinion, in a recovery mode, but can be only a wave B rally. But still, I can see a room for 61.8% or maybe towards 600. I also compared these previous corrections. You can see that somehow all of those are similar. Okay, so I'm thinking that maybe something is happening here as well. That's why maybe there is a bit of more further upside here. But again, it's the wave structure which to me is not really that bullish. Maybe in the short term, yes, but if I have to guess where the price, what's the most likely outcome, I still think that we need to see ABC drop first before much confidently we can call a new push higher. PayPal. Okay, PayPal, well, this one is not looking good. If you look here on a daily chart, you can basically see that the rise from here, from October 2023 to this December highs, has been made by 3 waves, and now you have this very strong aggressive drop even below the trend line that is now being retested. So I just think, I still have this pen here. I just think that there is a chance that this market will continue to the downside. But even if there will be some positive earnings like in the past 3 readings, of course there could be a trigger a bit of more upside, but still maybe some short-term covering rally in 3 waves, because this clearly looks like an impulsive price action. So bears are still here in my opinion. Now let's take a look also on Visa as well. I think that this one is much better and clearer here on the 4-hour time frame. Notice that we have seen a 3-wave drop from the highs back to this unfilled gap. that goes to, it was, I think that was a gap when Trump won the US election, when the whole market just went absolutely crazy. So that was retested, and now seeing a pretty nice strong reversal. So definitely this looks like a bullish formation here. Okay, and I would not be surprised to see more upside, even if again you're in some kind of a range here. You just take the distance of the first leg, measure it from and compare it from the second, and you get this upside projection. Now finally, semiconductors, because I also posted this one on our Twitter feed as well. X, not Twitter, yeah. So what's going on here? Well, that was a pretty deep retracement, but notice that after a sharp sell-off here at the beginning of the month, we rebounded from the lower side. So at least for the short term, I just think that this looks promising, but that doesn't necessarily mean that we have to revisit new all-time highs from here. We could be chopping around a bit later, but at least in the near term, maybe there is room for 230, and then we will revisit those wave counts sometime in the next few weeks. Kevin is asking for Tesla. We covered Tesla, I think, in last Monday. We have 5 waves down there, and we warned about some kind of a rally here, which I think it's already happening. Traders, once again, thank you for being with me today. Good luck this week. I will be away on Thursday because there are holidays in Europe, but I will be around in our chat room. If something significant moves or happens, I will get you covered. If you're not a member, make sure to check this out. Visit us at wavetraders.com, and hope to chat with you in our Slack channel. Traders, good luck. Bye.